some strategies don't change. Today's guest, Daniel Cocca, dives into his investment philosophy and why over the last 10 years it stayed consistent. We dive into the way he thinks and how you can apply that within your own investing business. Let's get right to it. This is the Investor Mindset Podcast. All right, guys, welcome back to the Investor Mindset Podcast. I'm your host, Steven Pesavento, and today I have Daniel Cocca in the studio. How are you doing today, Daniel?
I'm doing well, Steven. Thanks for having me.
Yeah, excited. Daniel's coming to us from Nashville, where he's based out of. And he's the managing director at Alpha Investing, a firm focused on institutional quality investments. And he's got an impressive track record. They've grown dramatically over the last decade. And we're going to be diving into a lot of the way that he thinks and his philosophy and how you can model some of those same things in your investing business, regardless if you're on the operations side, the passive side, or just a business owner looking to grow yourself. You ready to dive into things?
Let's do it.
So before we get into business, let's first start out by taking a look back at earlier in your life. What events or influences from your childhood shaped who you are today?
Great question. I always think back to my father, who was a very, someone who really promoted education and hard work. And from a very young age, I thought the path to success and therefore happiness was paved by lots of education, hard work at big institutions. It probably wasn't until I was in the real world for a few years, 25, 26, 27, where I started to think a little bit differently. And that's part of what gave me the courage, so to speak, to start Alpha with my partners is really the transition. And so as I think back on things that defined my life and my trajectory, that's a big one. I would have never ended up in New York City law firm if it wasn't for the way my parents raised me. But I also would never have made the jump to start a company. And so that's kind of my story, so to speak.
Yeah, it's so interesting, right? How we learn these things when we're really young, that if we follow this specific path and we go this direction, we're going to end up having the life that we want. And then when we get in that and we actually start experiencing and making some of those decisions ourselves, we're able to realize that there's actually other paths that maybe are a path that fits us better or fits the direction we want to go. And that's where we get to that decision point. Or are we willing to go into that unknown to then go and create something that might be that better life we dream of?
Well said.
So what I'm curious about is you obviously started out working in that institutional, or I should say that law firm space, and then you've since transitioned and grown this business over the past decade to be able to do the kind of deals you do. For those listeners who aren't familiar, tell us a little bit about Alpha Investing so that we can really dive into the strategy from a perspective of understanding what you guys do and how that's different.
Sure. So Alpha Investing was a company born somewhat out of necessity, right? All the founders of the firm were very busy working professionals, right? I was an attorney, a partner was an accountant, another partner was a venture capitalist, entrepreneur, what have you. And we were trying to do the same thing that a lot of people are still trying to do today, which is find access to high quality real estate private equity so we could take money we have in our stock market accounts and push them into the real estate world. The challenge that everyone finds is that getting a group being able to invest with a group that has $1 billion portfolio is not something you can do, even if you're writing $100,000 check, it's just not that interesting. And so all of this was happening on the heels of crowdfunding. And I was actually working on a lot of the venture deals behind the scenes at this time. And so I had a lot of good insight into how those businesses were set up and what they were set up to do. And at the end of the day, it just didn't feel like they actually met the needs of the investor. The goal was about creating marketplaces and raising a lot of capital for a lot of sponsors. For us, we're putting real estate deals together, but it's 10 or 12 a year. It's 4 or 5 partners that we have longstanding relationships with. And the goal of everything we're doing, and we can of course talk more about the very specific strategy, is trying to create this concept of alpha, right? What our firm's named after, right? And at the end of the day, we do that in a number of ways, but a few of them are, partnering with the right groups, looking at, sub $50 million small middle market deals where we think we can find off-market opportunities, where we think there are pricing inefficiencies, where we believe we can partner with an institutional buyer and buy from a mom and pop seller. That's where you get to add value just through management expertise. And whenever you can add value without spending money on a real estate deal, that's incredibly valuable. And so at the end of the day, what we wanted to create was a mechanism by which people like us could invest into real estate deals in the manner that we wanted to invest.
Yeah, and I think it's so cool to see how you've been able to create that, especially at a time where there was so much transition happening and people were starting to participate in crowdfunding and recognizing, what's available. And when people hear about crowdfunding, they often think about websites that you can go online and you can, find access to these deals, and you don't have any connection to the sponsor or really any connection even with that personal relationship with the company, that firm that you're finding that with. And I think that's one of the things that really has given the space a bad name in some ways, because without having that relationship, without having that experience with that company, you're not having the same type of investment dynamic that you would with a firm where you're knowing who's making those investment level decisions and finding a way to be able to invest alongside them. And so really, it sounds like the firm was really developed out of necessity because you couldn't find what it was that you were looking for personally. And one of the ways to be able to do that is to be able to come together and invest as a collective. We have some very similar values there, and really looking to partner with experienced sponsors and operators. So what is that value proposition when you're going to $1 billion player or an institutional operator like this? What is the value proposition that ends up getting your foot in the door and ends up allowing you to be able to invest and, be able to place your investors' capital and your own capital into these deals?
At the end of the day, in my opinion, real estate investing is about relationships and execution, right? And when we first started, our approach was much more about starting to build relationships. All the sponsors that we work with, you can actually trace back to a very small number of people. Most of them were attorneys that I worked with in New York. I worked in a capital markets practice that housed the firm's REIT practice under the same umbrella. And the attorney who actually created the REIT structure was the partner in that group. And so over the course of time, all those attorneys scattered to other firms and took on a bunch of sponsor clients and allowed me to basically go out and say, hey, this is exactly what I'm looking for in a sponsor. Who on your roster, checks these boxes? Can I speak with them? And that's kind of how we started the process. Warm intro, build relationships. And we started out being gap equity, right? That $1 to maybe $2.5 million, like a little bit larger than a lot of sponsors want to syndicate to high net worths. If they're going to do a 95-5 or a 90-10, LP-GP split, sometimes there's going to be one major LP and then a handful of smaller ones. But that $1 to $2.5 million was very valuable for a lot of firms that are looking at these sub $50 million deals, right? A $50 million deal at 70% leverage, right? 15 million in equity. And so, in a world where you have a partner who can do 10 to 12 and another that can do 1 to 3, that's really where we fit in. And we spent a number of years, probably 4 or 5, building up a track record with just providing this somewhat elusive, very attractive capital to sponsors. And then over the course of time, as our network grew and we built out relationships and track records and proved that our asset management team is going to actually add value to the process, right? I think we've set up a system now where we're going to be the majority LP on any given transaction that we invest in. And so the value proposition is a little bit different when you're in that position, right? It's not about the size of the check as much as it is about kind of what we're bringing to the table, right? And so that's kind of been our evolution as a firm, so to speak.
And so when you were in that position, when you guys were, starting out and you were developing as a firm, you were placing those $1 to $3 million. Was that a single check and you were going with like an SPV model where you're raising the capital and managing the investors? So when you were going out and doing that, talk a little bit about what ended up leading you to being able to say to those sponsors and having them say, yes, we're interested in doing that when they're in a position where they need that capital right now and you haven't raised it yet?
Yeah, the reality is we actually never engage with groups under the idea that this is capital you need right now. We typically spend 3 to 6 months vetting groups, sometimes to the extent that it's probably a bit annoying, right? But we want to take a deep dive. We want to get into the track record. We want to look at case studies. We want to have 4 or 5 conversations with principals and underwriting team, and just really understand and confirm that we're ultimately on the same page, right? And so it's only at that point that we actually start looking at deals, right, and considering an investment. So there's definitely a process leading up to it.
Yeah, and that process ends up putting you in a position where they know, like, and trust you, you know, like, and trust them, and you obviously have the confidence that you're going to be able to come through when that does happen. So when it comes to growing a firm like this, what has been your investment philosophy beyond what we've talked about so far?
Yeah, so I think an important thing to keep in mind when we started the firm, we needed to build a track record from scratch, right? I'm not a 55-year-old guy who's been in real estate for 30 years, right? And neither are my partners. We're backed by a lot of people that check that box. But when we got out there, it was all about building a track record, right? And understanding the landscape. And our investment philosophy from day one is really predicated on need-based and residential assets, right? People need a place to live. They need a place to grow old. That's true in a good economy, also true in a bad economy. And if we circle back to 2015, which seems like an eternity from now, the rumblings around real estate recession, general economic recession were all there. And so our focus really from day one has been downside protection. Now, the interesting thing about downside protection is that you don't know that you need it until you do, right? And it's part of the reason why our portfolios held up so well during COVID. It's because all the assets make sense on a cash basis, right? We haven't been dependent upon residual value or appreciation in order for the deals we're in to ultimately make sense.
Yeah. And by focusing on those recession-resistant assets, you've been able to continuously deliver even while things were growing. And now when things have contracted, even if it was for a short period of time, it's been able to stay strong. And that obviously gives people a lot of confidence. And how has that philosophy changed over time, over the last 6 years since Alpha I has really been focused on doing what you guys do?
Yeah, I mean, we have to believe, right, that we are at or near the end of this current real estate market cycle, right? And you'll talk to some people who think, we're basically there, or 6 to 12 months out, and you'll talk to people that think we're still 3, 4, 5 years out, right? And so I think I sit in the latter camp. Meaning I think there's at least a few more years to run, right? But at the end of the day, the philosophy is actually very similar. And this is the question I love to take. How we were thinking in 2015 is really the same way we're thinking now, with the added qualification that there's probably even a little bit more emphasis on downside protection. We set a standard that any deal we invest in will be able to absorb at least 20 to 25% economic vacancy, assuming there's no rent growth during the first year of ownership, right? And so that always gives us a strong downside buffer. And then, we want to make sure that the cash yield for whatever project we're working in makes sense. Now, we do a lot of, light to mid-size value add multifamily. We do a lot of affordable housing through a very unique partnership that generates double-digit yield. We do a good bit of senior housing, assisted living, memory care, again, all need-based residential, but an asset class that's very fragmented, tends to be higher cap rate acquisitions, better cash. Those are the types of things that we're going to be looking for.
Yeah, that makes a lot of sense. And what ended up leading to any of that evolution, right? Like, you've stayed with the exact same philosophy of focusing on properties that are going to be able to be secure regardless of what's going on in the economy. But what has led you to stay with that philosophy versus, changing it as you've grown as a company?
Real estate investing, particularly this type of small middle market investing, is already on a relative basis very high yielding, right? We're talking about projects where you're 2xing your money, if not more, in 3 to 5 years, right? And so if that's your baseline, you don't take an approach where you say, I need to optimize my returns, right? And trying to, kind of maximize returns based on risk, right? You're trying to find projects that can generate you that 15% average return where that there's a strong downside protection, right? And so that's part of the reason why we haven't had to change it much, is because it makes sense in a good economy and it also makes sense in a bad economy. Now, listen, we're sitting here today seeing, multifamily assets, for example, 80s, 90s vintage apartment buildings, trade at sub 4 caps in smaller primary markets, right? And that doesn't always feel, very comfortable, right? And if you believe that cap rates are going to continue to compress, you have to ask yourself, at what point is it just below a threshold where anything looks interesting and there are new deals? And so, we will look at other asset classes. We do look at other deals, but we always circle back to, the kind of the founding principles of the initial hierarchy. Caliber of the sponsor partner, underlying fundamentals of the asset class and the markets that we're looking at. And if all those boxes are checked, then we would consider, an industrial deal, which is also very hard to find one that makes sense right now, a storage deal, what have you. We do take comfort though in, again, knowing that people will always need a place to live. And, this kind of class B, particularly if you can create an elevated class B multifamily product, positions itself very nicely in the marketplace.
Yeah, that makes sense. And so, I'm really curious, right? You guys have been able to grow, in such a smart way. What role have strategic advisors or an investment committee played in your company's growth and the stability that you've had?
It's a great question. And the short answer is the people who have backed us and advised us have made all the difference, right? Because again, we were not this group of people with 30 years of experience in the space, right? We've hired those people and they're part of the team now, right? But when we first started, it was, me, you trust me, like, can you get behind what I'm doing? And this is why it makes sense to say yes, right? And so, there are a lot of different groups that have helped us along the way, whether it was sponsors who said, listen, I'll give you some runway, I'll let you go out and, I'll give you a $2 million allocation into my deal, even though I don't need it, with the hope that you're going to come back to me 3 or 4 years later with a $10 million check, right? Those types of relationships to, the groups that invested in our firm who, let us work out of their office, gave us guidance on, how to build a business, how to build a culture, because what we're doing here, we're not just building a real estate investment company, we're also building, alpha investment, right? And typically those are aligned, but they're not always identical, right? And so having advisors who have kind of been through that process already really makes all the difference. And some of the biggest ones in particular is a group in Los Angeles called Wedgwood Enterprises. They're one of the largest fix and flippers and hard money lenders, vertically integrated in all of that space. They backed us. They gave us office space in their building in Redondo Beach, ton of guidance to me and my partners. Those types of things have been very valuable in our firm's growth for sure.
Yeah, it's so interesting, right? Because sometimes people end up looking to companies that have been successful and they think, wow, how were they able to do that, right? And definitely it's grit and definitely it's perseverance and definitely it's all of the things that we know go into creating a phenomenal business. But in part, it's going out and finding great people who you can learn from so that you can end up quickly being able to model what's already been successful. And in some ways, it's through those relationships more so than logic. It's through those relationships that end up leading you to have an opportunity to be able to grow your business, because without those opportunities to raise on deals that they may not have needed you on, you wouldn't have had an opportunity to be able to develop the kind of relationship that you now have, or be able to develop the investor relations that you currently have that only come from actually doing deals. And so that is such a big piece. And what I'm really curious about is, what do you recommend to others who are developing in their own business, in their own career, who are looking to find potential members or mentors, people who are going to be able to work with them and alongside them in their company for mutual growth across the board?
It's a really good question, and building mentor-mentee relationships are very important. I'm someone that believes at any given time you should have both, a mentor and a mentee, right? And you build those relationships over time in the same way that you build your track record at a firm like ours. You can't do it in 6 months or 12 months. It takes time. That's just how it works, right? And so, similarly, some of the mentors in our group, professors that my partners had TA'd for in business school, or that we had met, professionally, or folks I met at the law firm and people that have introduced me to, and just kind of working through just being a person who says, hey, I value having smart people around. I don't need to be the smartest person in the room. I'm here to take advice. I'm interested in learning, and I'm excited about doing something that's a little bit different than what everyone else around me is doing.
Yeah, it's such good advice, and it's such a good reminder that we don't do it on our own. It really is a collective of being able to learn and leverage the thoughts and beliefs of others for us to be able to grow our own. So I'm curious, like what are you seeing that's happening in the market right now when it comes to going out and acquiring deals, and how should investors be looking at the market that we're working in right now in comparison with what we've been experiencing over the last couple of years? It's all relative, but I'd love to get your take on that.
Yeah, my initial thought is people are acting crazy right now, right? And it seems crazy to say that because I think back to 2017, and I probably felt the same way then, right? And no one really knows how much room there is to run. I don't think we've seen a marketed deal in 18 months that has made sense. Everything we're investing in is off market. Now, it's important to know that there are two types of off market. There's the lightly marketed, where it goes out to a handful of groups and there's still some bidding going on. And there's the true off market. And we're obviously looking for the true off market deal. The acquisition basis has to make sense, right? If an asset is makes sense at 50 million, you can't pay 58 and make the numbers work, right? And that seems like a huge jump, but there's a lot of foreign capital that has lower return requirements. 1031s through DSTs have become very popular. A lot of cheap capital out there, dry powder in real estate private equity. And so, you got to be kind of mindful of all of that, right? And you need to pick partners that can add value in ways beyond just what did I buy it for and what can I sell it for? And that means, how have they executed? The groups that we work with on a regular basis have a long track record of successfully implementing nearly identical business plans in the same or similar markets. And they're able to do over time the exact same thing, to the point that we can get comfortable investing with them in this environment, knowing that they've been doing it for years.
Yeah, being able to see that they've already succeeded at doing it so many times over and over again, knowing that they understand that business model in and out, means that you can compress some of the variables and still feel comfortable knowing that you're going to come out the other end in a secure place, with the likelihood being nearly the same, that the return structure is going to be equal. And that's super, super important, because whenever you're doing something 10, 20, 30 times, you're going to be a lot better at it than if somebody's coming into a new market, they're looking at a new asset class. There's just things that you don't know, and you don't want to be in a situation where there's something that you don't know that's quite costly, and across 200, 300 units, it could end up killing the deal.
I think that's really well said, right? At the end of the day, when you're underwriting a transaction, it's really about taking those assumptions that make up the projections and looking at the underlying facts and saying, does this make sense? But you're never able to fully back up with 100% certainty, projections, because they're forward-looking, right? We just don't know. And we could say, we believe your pro forma rents make sense because we've toured all the comp properties in a 5-mile radius, and if you renovate to this scope, we know that, you can get those rents, right? We've looked at market reports, we've looked at affordability and demographic data, right? All those things can help you get to a point where you say, this makes sense. But at the end of the day, you still have to decide, hey, this is the direction we're going. And there is always a little bit of a leap of faith. And so you want to make sure you have partners who are the type that can handle whatever gets thrown at them. Because once the deal is acquired, what we projected is no longer relevant, right? We're all going to benchmark against what a deal was projected at, but it doesn't matter, right? Now we're in the game and we're playing it with the cards that we've been dealt.
Yeah, we're on the field. We've got to start doing the actions to make sure that we can get that ball over the finish line. But at the same time, we had this whole plan going in, and it doesn't matter because now it's live and the clock's ticking and it's time to do some work. So this has been really amazing. What I'd love to do is I'd love to dive into the growth rapid fire round where the questions are quick, but your answers really don't need to be. So I'd like to talk a little bit about success. How would you define success and what is success to you?
Good question. We always ask on our podcast about wealth. Like, what does wealth mean to you? And it's always interesting to hear how people react. For me, it was really about finding a place that I felt like could become my own, along with my partners, of course, right? And so I think more about the intangibles. I think about just kind of being involved in building something from the ground up, the highs and lows that come with that, because no entrepreneur or anyone who started a company will, tell you that there aren't some moments where your back is really against the wall, right? And you're fighting for your life. But those types of moments, at least for me, are invigorating. Like, I love to have my back against the wall. Like, it's not so much the case anymore, but during that build-up period, I absolutely loved it, right? Like, that's what motivates me. And so, success is really just kind of continuing on this trajectory, right? It was really about putting myself out there, because I saw as an attorney, and I worked on so many deals, a lot of people out there doing really interesting things, raising a lot of money, being very successful. And the key difference when I was sitting in my lawyer chair between me and them was that they put themselves out there. They took the risk, right? And so for me, it was about taking the risk and then putting my time and energy behind something as we built it. That's how I ultimately think about, success for me, or at least how I internalize it.
Yeah, that makes so much sense. And based on that definition, do you feel successful?
I'm not sure I'll ever actually feel successful. I think it's one of those things where, like, you can always be richer, right? And, you hit certain milestones and thresholds, and an outside party may say, hey, you guys have been doing great work, you're successful. But there's still a lot, we're trying to do. And as the firm continues to grow, we plug into new avenues. Everyone on the team is very hungry. It's an important part of who we hire onto the team. And so, yeah, we're still working. So definitely not there yet.
Absolutely. Always got to be driving towards something new. So from a habits perspective, what are some of those keystone habits, the things that you've done on a daily or weekly basis that have led to that foundation for success?
Me, a big part of it is nutrition, exercise, getting good sleep, all the things that everyone will kind of tell you to do. Just being really smart about it too. And I'm not going to sit here and say that I've done all this research on my own and I've created this program for myself that's great. But I have a lot of really smart friends. I have a younger brother who is a physician, and I let them do that work in the same way we do the real estate evaluation work, for their investments with us, right? And then I implement it into my life. And whether that's something like meditation, whether it's yoga, which I'm a huge proponent of, all those things to feel good, right? That at the end of the day is how I stay productive, feel as good as I possibly can. And over time, I've learned these are the ways to do it. And these are some of the ways that you don't do it. And, you do more of the former than the latter over a long enough period of time, and it works out.
Yeah. I love that. So let's finish on this. From a purpose perspective, what drives you to live your best life every day?
Right now it's about kind of building alpha and, putting it on the map as a real kind of player in this space, right? And simultaneously building up the team around, because, when you've got a relatively small team that you're building up, like, everyone effectively becomes, a family, not to be a cliche, right? But everyone's very close. Everyone is, personally and financially invested, emotionally invested in what we're doing. And so that's really a big part of I think what drives me right now is let's do this. Like, we've put ourselves in position. We've spent a good amount of time getting ourselves here. Now's the time to execute, right? And yeah, for me, that's really what it's all about. Again, we're all really hungry. We all come from middle-class families. We all are trying to get after it. And, that's kind of the story of Alpha.
Yeah, I love that. I love meeting people who are really committed to what they're doing, who are driven, who are finding a way to create a better life and make an impact, not only on the people they work with, but also the people they serve. So thanks for joining us today. It was really fun diving in and getting to know a little bit more about you. Where can people find out more about you or get in touch?
Yeah, our website is alpha.com. We are a private group, right? We're not, soliciting new investors, so to speak. But if you are interested in having a conversation, you can reach out. I would just note that you saw me on this podcast there, and I'll give you a call and we can chat about what we do.
Awesome. Well, thank you so much, Daniel. It was a pleasure talking with you, and we'll see you next time. Today's episode is sponsored by Von Finch Capital. If you're interested in investing alongside me in the same type of real estate opportunities that I personally invest in, then head over to Von Finch Capital and join their private investor network. You can do so at vonfinch.com/invest. Join me on that next deal, and I look forward to seeing you on the inside. Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share it with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.